Hello and welcome to another edition of Investing for Generations. Today I want to talk about another stock of my watch list, beloved stock of Warren Buffett, the Bank of America. As always, I want to talk a little bit about the history of the Bank of America, go through the financial numbers, take a look at the management, and give my conclusion if I think Bank of America is a good investment right now. But before we start, it took me really a lot of work to bring all of these information together and analyze these stocks for you and also for me, of course. And as a reward, I just want to ask for you to subscribe because this helps my little channel so much to grow. And if you like the video, also give me a thumbs up. Thank you. The Bank of America was founded in 1998 by a merger of Bank America and Nations Bank, and it's the ninth largest financial service company in the world and the second largest in the USA. Bank of America have over 200,000 employees right now. And with that, it's a really big player in the banking industry. And as I said, Warren Buffett really likes banking and insurance companies. And the Bank of America he likes the most because it's just the second largest position right now in his portfolio, just after Apple. And just a few days ago, he just bought shares of another $800 million of Bank of America. Then dive deeper into the financial numbers of Bank of America. The company pays almost 3% of dividend, with a decent payout ratio of 46% and a very crazy high growth rate of 40%. And if we take a look at the dividend history of the Bank of America, you can see that in the Great Depression until 2015 they didn't pay dividends, and since then they started to pay again and just grow immensely. But they're still far away from the dividends before the Great Depression. And why was it possible to pay another dividend and grow the dividend like this for the Bank of America? We will see this in the next pictures. In the last 5 years, they grew the revenue a lot, and also the net margin grew a lot from around 10% in 2015 to right now almost 18%. So they just started to make money again, and a lot of money again. And even in these very difficult times with the pandemic, lots of the economy shut down, Bank of America was able to earn money. Even in the last quarter, they earned not much, but at least a little bit, 37 cents per share. And that's really a good sign in a time where also banks not necessarily earn money. If we remember Wells Fargo, for example. And also when we look at the free cash flow, we can see that they just make money over the last years all the time. And I think that's one of the reasons why Warren Buffett likes this bank and even bought more of the shares. Then also take a short look at the balance sheet. The Bank of America have a debt to equity ratio of 1.08, which is okay. A little bit concerning is that the long-term debt just rises lately, but with its very low interest rates, I guess that's not a big concern. Then take a look at the management. The current CEO of Bank of America is Brian Moynihan. He took over as a chairman of the board and CEO in 2010. So he stayed there for a while now, and he just took over in the depth of the Great Depression. And when we take a look at the stock price under his regime, we can see that that's kind of a roller coaster. First of all, price goes down to around $5 to just climb to over $35 in the peak just before the latest March crash. For me, it looks like Moynihan just turned the big Bank of America around, and I would say his regime is a success. And so I have a lot of faith that he is also a good CEO for the future of Bank of America, and I have a lot of faith in that. Then take a look at the price. As always, I try to calculate the intrinsic value, and therefore I used my spreadsheet again. If you want to know more about that and a deeper explanation, just look into my video where I explained how to calculate the intrinsic value of a business. You will find a link just here up in the video. And with this calculation, I come to a fair value of Bank of America of $25.51, and Bank of America currently trading at $24.10. Therefore, we have a margin of safety right now of 6% to the fair value or intrinsic value. But of course, I also look at other numbers. For example, I look to the PE ratio, the price earnings ratio, and this is quite small at 11.59 right now, which is kind of a sign that maybe Bank of America is cheap right now. And I also look at the price to book ratio, and the price to book ratio is 0.8 right now. And this is really a sign that maybe my calculation of the intrinsic value is just too conservative, because a price book ratio under 1 just means you can buy the whole company under its book value, and that's normally a sign that the price is really cheap. For me, since I have already JP Morgan, Scotiabank and Wells Fargo in my portfolio, I really would like to buy also Bank of America, but I will wait until the price dips under $20, and hopefully it will, because I would be very happy to buy Bank of America for a very decent price, and I think under $20 this would be a real opportunity. What's my overall conclusion then? Bank of America is a big bank with a very good market position, with high margins and earnings even in the crisis like now. And it's Warren Buffett's darling, which is always a good sign, I would say, and even more in the banking sector where he is really good in. So maybe we should just follow him. On the other side, of course, with the low interest rates in the past and also in the foreseen future, and the recession and maybe depression looming, and with it the write-off of a lot of loans for the banks, it's really difficult for the banking sector and therefore also for the Bank of America to make a lot of money. But overall, I think the Bank of America, maybe behind JP Morgan, is the second best play in the US banking sector. So that's my opinion on the Bank of America. Let me know in the comment section if you agree or maybe disagree. And if you like the video, give me a big thumbs up. This helps for the algorithm of YouTube so much. Subscribe to the channel, ring the notification bell to never miss another video. And then we will see the next time then with another analysis of a stock out of my watch list. See you then. Take care. Bye bye.